Good evening, Harish. Not 100% for vision purpose. Will explain only 80% of the or 70% of the very high set. Now check once again. Now I think the voice is loud. One request, please. All important questions from point of view of the end of this session. Yes, exactly, Harish. I will give the clarity. But in the chat. Any other queries? Already, I bro. Mahesh Shah. So my voice is louder. Good, good. So without that, let's start our session. Wait a minute, I will share my entire this class into all groups. Helpful to remaining students. Okay, done. So when coming to our revision session, so it's very helpful to you guys for writing exams in June. When it come to this revision started, the revision batch start for the purpose of benefit to the student. So it's not a EO batch, guys. EO batch I already recorded and we are selling in my app. It is a clear cut. In that EO batch, I provided a detailed explanation and problem clarifications on the calculation part. But when it comes to the revision session of this, YouTube. I can't give that much of a clarity. I will give an overview, and some cases I will give a calculation part. This is a clarity regarding EO batch and revision classes. When we come to this revision classes, every chapter I'm coming with everyday revision. Now today our revision class about chapter 1. Chapter 1 in SPM, the chapter name is Introduction to Performance Management. So yeah, Vishwa, good evening. So when it comes to Introduction to Performance Management, so when it comes to Introduction to Performance Management, first exam point of view, analyze the trends. When it comes to exam point of view, in few cases, in a few attempts in a old syllabus and in new syllabus also, they are asking two 7-mark questions. One 7-mark question is mandatory from this chapter. The mandatory question, question number 2A. Another 7-mark question is not mandatory. In few or in one attempt, they ask a question called ratio analysis problem. So generally, you can focus only one question, that is theory question. It's a mandatory question in question number 2A. So this is called question number 2A, theory question. So when you come to in this chapter one also, we have a problem as well as case studies. One case study is there. I will explain that book-based case study in this session only. So there is a chance for getting a case study as well as problem. It's on other hand. This is for just 10% chance. This is for 90% chance. In every attempt, there is one theory question from chapter 1 called Introduction to Performance Management. Hope you guys clear. Okay. So in a whole syllabus, only if you focus 5 or 6 questions, that is much more enough for getting a marks from chapter 1. But when it comes to new syllabus, there is a no specification regarding 5 or 6 important questions. You have to understand the entire concepts. If you understand the entire concept, they are framing a question from not direct question. They are framing a question from the concept. That's why in this class, we are mainly focusing on the concept. After the end of this session, we are focusing on what are the important questions. What are the important questions? Not like 5 or 6 important questions like probability for getting the questions. I will explain. Okay. Next, without late, I start with the chapter. The first question, the concept. Concept number 1. What is meant by performance management and its objectives? So from every chapter, you have to understand what is the meaning of the chapter. What is the meaning of the chapter? If you understand the meaning of the chapter, then you can easily answer the questions. Why? Because in every chapter, there is a one specific introduction. Based on the introduction, they will frame the question. So, what is performance management, and give its benefits, and give its objectives, and give its principles, and give it so and so. That kind of questions they will frame. For that answering the question, you have to understand the first what is meant by. When it comes to what is meant by, performance management is a continuous process. Performance management is a what's a continuous process. It's not a single time. In every time we were doing again and again, again and again, we are measuring our company performance. That is called performance management. So measuring of what? So performance management is a continuous process of identifying, measuring, and developing performance. Developing performance in a company or organization. So this is called performance management. Not only identifying, measuring, and developing, guys. It is a linkage between all individual performance in an organization and performance and objectives to the organization for overall goals and mission. So this is the definition part regarding to performance management. So it is a continuous process of identifying, measuring, and developing performance in an organization. Linkage between all individual performance. It's not focusing on single thing. It's focusing on all organization performances. It linked and getting the results called mission and goal objectives of the company. Okay, done. So few more points is there to understand performance management. So performance management is a traditional concept. Performance management is a which concept, guys? Traditional concept. Why performance management is a traditional concept means it collects information based on past. Based on past. That's why performance management is a traditional concept. And the second point, it is a historical in nature. Another important point. It is a what in the nature? Historical in the nature. Why it is in a historical in the nature means I already told the traditional concept means what, guys? It focusing on the past information, right? That's why they're using a word called historical in nature. Next, another important thing, the concept of productivity, utilization, and efficiency are the key linkage to the performance management. So, what are the concepts involved in performance management, guys? The concept of productivity, the concept of utilization, the concept of efficiency. I will give a more clarity. I will give a more clarity about productivity, utilization, and efficiency. Guys, clear? So these are the definition part and important points regarding to performance management. So if you write like these points in a sentence format, that is helpful for getting good marks. Let us check. Let us check. When it comes to when it comes to sentence format. Performance management is a continuous process of identifying, measuring, and developing a performance in an organization by linkage each individual performance and objectives to the organization overall mission and goals. Okay. Next, performance management performance measurement is a traditional concept. Performance management is a what concept, guys? Traditional concept. It's based on information get from past financial statements. Next, performance management depend on the financial information which is historical in nature. Historical in nature. Next, The concept of productivity, utilization, and efficiency are a key linkage to this aspect of performance management. Okay. When it comes to objectives of performance management, why we are learning performance management in student point of view, why we are implementing performance management in an organization point of view. English is not possible, guys. English is possible. Next, when it comes to objectives, the first one, the objective to improve both individual is like a of employee point of view as well as a hierarchy, higher authority point of view as well as lower authority point of view. So if you want to organization build strongly, you don't focus only on top management. You have to focus on all managements. That's why it is a improve. It's a improve both individual as well as organizational performance. If you implement performance management policies in an organization, it helps you to improve both individual performances as well as organizational performances. That is the first objective. Next, identify the performance requirement. So where performance analysis is required, we can easily assess if you implement. Next, provide a regular feedback framework. If you provide a regular feedback to your employees and the top level management, they will rectify and they can work for organization. That is called regular feedback framework. And the fourth one is assisting the employees with their career development. If you give a like a bonuses and a skill development programs for free of cost, this will help their growth. If employees have grown, automatically they work for organization. Our organization will also grow. So these are the first two concepts, guys. What is meant by performance management and its objectives. Okay. Next, when it comes to concept number two, guys. Concept number two is a plus category question. There is a more chance for getting in exam. Basically, this kind of question is not there in our material. So this kind of question is not there in our material. It is a question in a old syllabus. In a old syllabus, plenty of times they are asked this question in again and again manner. So that's why I inserted in our new material book also. So here difference between performance management and performance appraisal. Performance management, performance appraisal. For easy understanding purpose, take an assumption. It's a private company. Just for understanding, guys. Don't write this private company and government company in exam point of view. Just for your understanding purpose. Performance appraisal is a government company. Okay. Now, the first difference is it is a process. It is a system. It is a process. It is a system. What is the difference? I am not getting. I am getting only the word you said. Vishwa, how can I access this PDF? Means this is my own book, own book, Vishwa. So if you want these notes, I will share after class completion. So material you need to purchase. So okay, take an example to understand this process and the system. For example, when is a coaching, we have started a coaching institute, and that coaching institute every week, every week, every week, or every month, or every quarter, and every exam, if I give a feedback I give a feedback to every student what you are studying, how much marks you are getting, how much marks you are getting. That kind of review I'm giving in every week or every month. That is called a process. That is called what, guys? Process. When it comes to system, at the end of the year, I am announcing today is a parent meeting. On that parent meeting, I am saying everything. I am saying everything. That is called system. It happen only once in a year. It happen in only once in a year. But when it comes to the process, it is a continue in the nature. That is a mean for process and system. That is the implementation of perform in organization point of view. When it comes to continuous things happening in private companies, because they're clarity about their goals and mission. But when it comes to government companies, they're not focusing on their goals and targets and achievements. That's why I use this government point of view. It's a private company point of view. So two examples, guys. So for a student point of view, it's in an institute given every month or every week or every quarter basis analysis. That is called process. So at the end of the year, they will providing only one time review meeting. That is called system. Guys, clear? This is example. When it comes to example two companies point of view, it happen. The process is happening in private companies, not happening in government companies. Guys, clear? Next. So the second difference, it is a comprehensive approach. It is a narrow and limited approach. Narrow and limited approach. So when it comes to the comprehensive means comprehensive means it included all things. The word comprehensive means what, guys? It not limited to particular thing. It access all things. That is called comprehensive approach. When it comes to narrow or limited approach, they're only focusing on specific things. They're only focusing on specific things. When it comes to the performance management, a comprehensive approach. In comprehensive approach, they're setting goal setting, feedback, development plans. Development plans. These all kind of things they are doing in performance management. But when it comes to appraisal, they're only focusing on evaluating the past information. They're only focusing on evaluating past information. Based on evaluation of the past information, they are taking a decision. So only one thing they are focusing. That's why it's a narrow and limited approach. When it comes to performance management, they're focusing on goal setting, feedback, development plans, strategies, operational strategies. They thinks everything. They thinks everything. That's why it is a comprehensive approach. Next, third one. It is a strategic goal. It is a operational tool. So go with here also tool. Go. So it is a strategic tool and it is a operational tool. So when it comes to discussion, what is the mean of a strategic tool and operational tool means? When it comes to operational tool, when it comes to operational tool, there is a routine work they do. Wait a minute, there is a doubt for Nawin Ravi. Bonus giving to employee is a considered performance appraisal, sir. No, no, man. Here things are not about salary and bonus. The things are not salary and bonus. But you can take that bonus as an example for performance appraisal. But the important thing is issue not issue of bonus. Why? Because in a performance appraisal, they are focusing on monetary terms, like you said, bonus, etc., etc. But when it comes to performance management point of view, they're not focusing on the monetary terms. They're focusing about their growth and performance, their knowledge, their skills. Guys, clear? Now, that also I have an example I give you. So when it comes to operational tool, when it comes to strategic tool. So the word strategic tool means, yeah, we are trying employee goals and targets and their abilities and their skills. But when it comes to operational tool, where it is a routine HR work, HR will give you a work you as an employee you have to do. So that is called operational tool. That and it's not a routine work. It is called strategic tool. Next one, owned by line manager, owned by HR department, owned by line management and owned by HR department. So if it's a team leader guiding an employee regularly, if if a team leader guiding an employee regularly, it is called performance management. So if HR conducted a year-end review, HR conducted a year-end review, that is called performance appraisal. Next, it is a flexible process. It is a monolithic system. It's a monolithic system. So the word it's saying simply monolithic. The word monolithic means they're focusing only single things. So it is a flexible process means, is a flexible process means. So whenever employee need a skill or extra knowledge, company will give a guidelines to them. Please update your skills, etc., for your growth as well as organizational growth. That is called a flexible process. As the employee easy, he can adjust, he can easily update for present technology. But when it comes to monolithic system, the only it things happening only once. Like a HR team will give a guidelines, do work this. For example, simple for example, in a market, lot of people are doing written filing task. Written filing tasks. So CA CMA completed professionals also doing written filing, as well as degree completed students also doing written filing. What is the difference? In a CA CMA qualified have a knowledge, they will follow the rules and regulations, the updations every time. But when it comes to degree based professionals, they do only single way. They know how to file this. They don't know how to handle this. Hope you guys clear. That is the things you have to understand. Monolithic means they know how to do. They don't know how to deal. So when it comes to this flexible process, the employee know how to find, how to do, as well as how to deal. That is the meaning for flexible process as well as monolithic system. The next point, it focuses on present and future. If I give a good knowledge or good skills to my employee, it helpful in future. Next, it focus on past, how that employee works. If the employee works in past good, he will work future also good. That kind of blind rule is followed in appraisal. Next, documentation is kept to minimum. It involves complex paper, complex paper. The simple thing here also. So when it comes to documentation kept to minimum means here only discussion between line manager and employee. Here is a discussion between what and what, who and who guys. It's a line manager as well as employee discussion. So they will give some guidelines about their future growth. That's why there's no discussion, there is no paperwork. So there is only discussions are happening in a performance management. When it comes to appraisal, it involves a huge paperwork. Like in a document, they will give a guidelines in a document of 3 or 4 pages. Every employee need to understand each and every point. After completion of the points, they need to put a signature on that. That's why there is a complex paperwork. In management, there is a less paperwork, minimum paperwork. So these are the few differences we have, guys. At least you have to quote 7 to 8 differences. You will get a good marks. So I just quoted only 7. So then in our way we have a 10 or 11 differences there. So this 7 is sufficient. If you complete this 7, you can write your own 1 or 2 extra. Now let's check here. So up to here we completed. Next, the additional points. It focuses on values, behavior, and objectives. So, what the non-reality they asked, bonus is an example for performance appraisal. That is the words they use it here. It focuses on the values, behavior, and objectives. There is not focusing on monetary terms in performance management. It focuses on quantified objectives. The word quantified objectives means monetary values like bonuses and benefits or Deepavali bonus, etc. Next, it is not directly linked to pay. That's it. It's not related to money or salary related item. So it is a directly linked to pay. It's related to money. Next, the use of rating is less common. So here the rating is frequently used. So which person, the person having a high rating, he was a good employee. They will give more monetary benefit. But when it comes to performance management, there is a no rating concept. Next. So it is a holistic approach, it is an individualistic approach. Holistic means total, individualistic means a single thing. So these are the differences we have regarding to performance management and performance appraisal. Any doubt regarding this concept number 2, guys? Anyone? Okay. So next concept number 3. Concept number 3, guys. When it comes to concept number 3, elements, components of performance management. Elements and components of performance management. So there is a chance for getting a question like this. What is meant by performance management and its objective? It's a question. Please give me, please explain about elements of the performance management, or what is meant by performance management, and give the components of explain the components of the performance management. Let us check what are the elements and components we have. So when it comes to elements and components, it's like a similar, but we have a difference. It's like look like a similar, but not same. Let's first the elements. The first element is setting objective. Setting objective. Don't write sentences. At least write sentence with your own language. So you know the basic meaning of setting objective. You have to write that meaning in our materials. They provided only either side headings or huge content for that side headings, but I am simplifying this. I am simplifying the content. So the setting objective means setting clear goals for employees. Guys, clear? Next, second one, measuring the performance. The meaning of measuring the performance, evaluating how well goals are being met. So, how to find out the solutions in a simple manner. So, evaluating how well goals are being met. Next, the third element, feedback mechanism. Third element is what kind? Feedback mechanism. So, feedback mechanism means giving regular feedback to what is giving feedback to improve. Yeah. Next, fourth element, reward system. Reward system. So when it comes to reward system, recognize, recognizing and recognizing the achievements. So if you recognize the achievement, it is a motivation for the employee to good work for next time. Next, amendment of objectives and activities. So when it comes to simple sentence for these amendments, adjusting goals if needed. Adjust. If not possible, what you set the targets, you change the targets. Suggesting goals if needed and activities. Guys, here. Next. So these are the elements, guys. These are the elements. Next, components of performance management. Components of performance management. Let us check the components. So when it comes to the components of performance management, the first one is performance planning. Performance planning. And the second one is performance appraisal. And the third one, feedback and counseling. The fourth one is rewarding good performance. And the fifth one, performance improvement plans. And the sixth one, potential appraisal. Potential appraisal. Now let's check the points. Take an example, one student. One student. Uh, First, performance planning. First, college or school need to plan how they assess the performance. In a student point of view, how they assess exams. So example here, exams. Next, conducting the exam. Without conducting the exam, we don't know the marks now. Conducting the exam. After conducting the exams, they will give a progress report called feedback. Progress report. So if we get a good marks, if we get a first rank, school or college give a reward, either book or bonus of cash or etc. If students are getting a not good marks, so they will call them, they will give a improvement tools. So you have a good knowledge in maths and science, you have to focus on languages. Or few students point of view, you have a good knowledge in languages, you have to focus on math and science. Some students are not good in all, that's why you have to focus in all subjects properly. That kind of things is called improvement plans, guidelines. So after that, recheck. After that, what guys? Recheck. So that is called potential appraisal. So this is the way to keep these points in your mind. So performance planning, performance appraisal, feedback and counseling, rewarding good performance, performance improvement plans, potential price. Any doubt regarding this question, guys? So comparing to elements, these components are very important, guys. Components are very important. So a lot of times they ask me a question like this: what is meant by performance management and its objectives? Question mark. Explain components of performance management. Next, unit number 1.2, performance. What performance, productivity, and efficiency. I already told now. I will give a clarity in further time. This is the time. So explain the concept of relating to productivity and efficiency. Guys, focus more on this. It's look like it's similar, but it's not similar. When it come to they can prepare case study based on this concept. That much of potential concept it is. So productivity and efficiency. So this productivity and efficiency is like a identical things, but not a same things. It's an identical things, but not a same things. Let us check. Productivity versus efficiency. How much output is produced relative to input? How much output is produced relative to input is known as productivity. Are you guys clear? Here they are not focusing on quality and profits. They're only focused how much inputs I provided. Based on that inputs, how much output I got. How much output I got. This is the things only their focus. This is only things they are focus. Next, when it comes to efficiency, doing a task with minimum waste of time, resources, or efforts. Like quality and smartness of work. Smartness of simple guys. Take a general example to understand this. So one of my friend, he was CMA final at the time. So so he was always in study hall. He was always on study. How many hours you are uh, effectively using? So ask the question, how many hours you are effectively using? So always he's saying that I am in study, I am using, I am effectively, I'm not effectively. So today I completed 12 hours of study. Today I completed 10 hours of study. Today I completed 14 hours of study. I have one day I asked him, okay, you studied 13 hours or 12 hours or 14 hours. Okay, after 14 hours, how many hours you effectively utilized? So, what is a daily routine? I asked him, what is your daily routine? He told that I start with the CF4. After completion of 1 or 2 hours of study, I will use mobile phone. I will chit chat with friends and I will call to few people. After that, I will start SFM. Again, it's a lunch break. After that, I will start SPMBV. After, I will use mobile phone. After, I will go to outside, eat the snacks. After that, etc. He told etc. etc. Out of 14 hours, he effectively utilized only 8 hours. Hope you guys clear. But he's saying that 14 hours I am studying. That 14 hours is known as productivity. That 8 hours is known as efficiency. That is the basic difference between productivity and efficiency. So how much wastage is there? How much resources we are used? How much effort they put? They can't focus on the productivity. They're only focusing. These inputs are given that this much of output I will give. These are the things they're focusing on productivity. But when it comes to efficiency, they're not focusing on the inputs. They're focusing on how much less inputs I provided. Based on that less inputs, how much I will receive output. Guys, clear? So how much output is produced relative to input. So during a task with a minimum waste of time, resources, efforts, quality and smartness of a work. Guys, clear? Next. So in this productivity, it classified into two parts, guys. Total productivity, partial productivity. This also A plus concept, guys. The huge chance for getting a case study from this concept. Now, the productivity are classified into two types: total productivity and partial productivity. When it comes to total productivity, all inputs like labor, machinery, material, were optimized. The word optimized means full. Optimized to produce more output. Produce more output. So if you utilize all what are the inputs you are used, if you use all inputs effectively, that is called total productivity. Let us check the partial productivity. output increased by improving just one input. Just one input. I'm not optimally press the all inputs. I'm using only, I'm improving only one input. So it is called partial productivity. So let us take an example to understand this. For example, a car manufacturing company is increasing its production from 100 cars a day to 130 cars a day. So generally they are producing 100 cars. Now they are increasing that 100 cars to 130 production. How it possible means by improving labor, machinery, materials. By improving labor, machinery, materials, they increased all inputs. They're increasing all inputs. That's why it is called total productivity. Take another example to understand partial productivity. So simple is a partial productivity. There is a bakery. In that bakery, they are using extra yeast. It is a cake preparing material. They are used different yeast for cake making. Because of that, only the yeast, the cakes are produced more. So it means they're improving only one material, one input. That's why it's called partial productivity. In simple, if you focus all inputs, total productivity. If you focus only one input, it's called partial productivity. Okay. Now, when it come to calculation part, when it come to calculation part, productivity equals to output divided by input. Output divided by input. Next, when it come to efficiency, I already told now doing a task with a minimum waste of time, resources, and efforts. Take another example to understand the efficiency some more clear. So there is a two drivers. Driver A, driver B. The destination time is 6 hours for two members. But A reached the destination within the 4 hours. B reached the destination 6 hours. 6 hours. Why A reached within the 4 hours means he used the GPS, Google Maps. He was not used Google Maps. He manually asking some people and they reach the destination. He put it a smart work. He put it a hard work. So hard work talks about productivity. Smart work talks about efficiency. Hope you guys clear regarding this productivity and efficiency concept. Why? Because if you know this, if you don't know this clarity regarding this productivity, total productivity, partial productivity, efficiency, you are not you not get a good mark in case study. So please keep these points in your mind. So it's not for theoretical question, it is for case study purpose. Okay, next. So let us check here. So productivity refers to the rate at which goods and services are produced by an individual, team, or organization. Productivity measures output relative to input. So there are two measures of the productivity: total productivity, partial productivity. It measures the change in output related to change in all or more than one input. All or more than one input is an MCQ. All or more than one input. In partial productivity, the change in output brought about by change in one particular input. One particular input is known as partial productivity. The calculation part is output divided by input. Next, when it comes to efficiency, refers to ability to accomplish the task within the minimal waste of time, efforts, or resources. Efficiency measures the ratio of useful output to total input. Next, In other words, productivity focus on the amount of work done, while efficiency focusing on how well the work is done. There is a lot of difference. How work done, how well work done. How well means I am using less resources, getting a more output. That is called how well. So I am using input, I get an output. That is called how work done. That is clear. Next, improving both productivity and efficiency can lead to increased output, reduced cost, and better outcomes. So if it is a output increases, cost decreases, automatically company get a profits. That's why every company focusing on productivity as well as efficiency. So point-wise clarification of the two terms called productivity and efficiency. Cost as an input. In a productivity point of view, I focus on only numerical input point of view only. I'm not focusing on money point of view, rupees point of view. So cost is ignored. In efficiency point of view, I'm focusing on I will put less resources. If less resources means I'm reducing the inputs. If reducing the inputs means cost also reduced. Efficiency focusing on cost reduction. Quality point of view, quantity point of view. In a productivity, I have only quantity, not quality. So that's a simple thing. Productivity, quantity, efficiency, quality. So refinement. The word refinement means improvement. Efficiency is the improvement of productivity. Very, very important MCQ. So efficiency is an improvement of productivity. So this is the concept number 4, guys. Okay. Next, when it comes to unit 1.3, financial performance analysis. In this financial performance analysis also, we don't have any theoretical question. Just you have to understand the concept for case study based questions. Case study based questions as well as in introduction I told now there is a chance of getting problematic also. That problematic is possible from this unit 1.3 financial performance analysis. Okay. So when it comes to financial performance analysis, the word financial means always few things will get in our mind. Financial statements. Financial statements. So it's a very, very important for everyone. It's very, very important for everyone. Like internal persons as well as external persons. You already know the meaning of internal persons and external persons. So you already know the meaning of internal persons and external persons. For example, company employee is an internal person, creditor is an outside person. In a simple example. So internal members and external members, everyone are using financial statement for analyze the company financial worthiness, money worthiness, and performance of the organization with help of financial statements only. Okay, let's see here. Analysis of financial performance. Analysis of financial statement is the process of evaluating the firm's financial position and performance. Okay. Financial statement analysis help managers identify the financial strength and weakness of the firm. So why, as an outsider or an insider, why we are analyzing the financial statements means only the thing is to find out strength and weakness of the company. To find out strength and weakness of the company. Okay. So analysis of financial statement is an important aspect for user. There is in audit there is a in audit and as well as law. In audit as well as law, there is a include it's a lot of definition for user. There is a lot of definition for user. So that user is also be known as in a law. They're using a word called stakeholder. They're using a word called what guys? Stakeholder. So stakeholder means all not a share. The word stakeholder means not a shareholders guys. Stakeholders means all people who are engaging with directly or indirectly to the company are will covered under stakeholder list. The stakeholder list is nothing but user, the person who use the financial statements. Next, as per section 2 subsection 40 of the Companies Act 2013, Schedule 3 define a financial statement in relation to the company to include the following. The word financial statement means not a single one, it's an inclusive definition. The first financial statement is the balance sheet. Balance sheet. Next, when it comes to the second statement called profit and loss account for all manufacturing entities, when it comes to NBO, we are not using the word called profit and loss account, we are using the word called income and expenditure. Next, cash flow statement. So cash flow statement is not mandatory for all organizations. There is a few exceptions that companies can't prepare. They need not to prepare cash flow statement. The companies are one person company Small company, no, dormitory company, maybe no, they are not, no need to prepare cash flow statement. Remaining all companies need to prepare cash flow statement also as a part of financial statements. After that, a statement of change in equity and explanatory notes. These are the definition of financial statement. So financial statement means not only P&L account and balance sheet, but also cash flow statement, statement of change in equity, and explanatory notes. Okay. So they provided explain the significance of financial performance analysis. The few people doing in few minutes. Control or check. Audio is not good. Sir, you as of starting stage. Vishwa, any issue with the voice? Harish, but now 1 hour is completed. Since starting, voice is not clear. That's not there. So, next. Okay, then. So next, when it comes to financial performance analysis, different people think, different people using financial statement in different way. So trade creditors and suppliers, bondholder and lenders, investors, management. Let us take in trade creditors and suppliers point of view. When it comes to trade creditors and suppliers point of view, they will assess our company financial statement for knowing the current work like liquidity position of the company. Why they are checking the liquidity position means the only thing is if company have a strong liquidity position, they can repay money within the time. That's clear. That is the purpose. Trade creditor and supplier analyze our company financial performance, financial statements. Let us check here. Trade creditors are interested in the liquidity of the firm. The supplier and other creditors are interested in knowing about the solvency of the business. Solvency of the business. The ability of a company to meet the debts and when they fall due. So traders always check liquidity position of the company. So if a company having a strong liquidity position, they are ready to give a credit. They will ready to give a credit. Next, bondholder and lenders. Bondholder and lenders. So when it comes to bondholder and lenders, they are focusing on the cash flow ability. So they're focusing on what guys? Cash flow ability. So when it comes to cash flow ability of the firm, so if company have a lot of inflows compared to outflow, so bondholder and lenders are ready to invest in a company. The investment purpose only they are assess our company financial statements. Next, investors. So investors are focusing on the earnings. Cash flows are different, earnings are different, guys. So earnings. If company give a high range of dividends and a high range of interest, investor is ready to invest in your company. They will check some ratios and some they will check PE ratio. Based on that analysis, they will invest. So if you investor need to calculate the PE ratio, coverage ratios, they need to assess our company financial statements like balance sheet, P&L account. Next, when it comes to management, so management are assessing their financial statement again for the purpose of knowing the financial worthiness, strength and weakness of every year. So next, concept number 7. So this must be A plus category question. Types of financial performance analysis. When it comes to types of financial performance analysis, we have two types of financial performance analysis, guys. One is material used, another one is modus operandi. Modus operandi. So let us check what is the meaning for material used. In this material used, on the basis of material called financial statement. Material is called what, sir? Financial statements. If you analyze the performance of the company with the help of financial statements, that is called material used classification. So financial statement, financial performance can be analyzed in the following two ways. With help of financial statement, they can assess in two ways. One is external analysis, another one is the internal analysis. The word external analysis means the outside the company persons doing analysis. Internal analysis means within the management persons analyzing the financial statements. Guys, clear? So external analysis is undertaken by outsiders. They are undertaken by whom, sir? Outsiders of the business, namely investors, potential investors, trade agencies, government agencies, and the general public who have no access to the internal records of the company. So, what are the list I told, I explained, there is no chance of access the internal records. They can access only financial statements like P&L account, balance sheet, cash flow statements, and changes in equity, working notes. Why? Because these statements every company showing in their websites free of cost. So are you clear, sir? In that information, it is no sophisticated or important information. It's a generalized information. So in a simple words, it's generalized analysis also be known as external analysis. Next, internal analysis. This analysis is undertaken by people, namely executives like top management and employees of the organization like internal auditors by the officers appointed by the government called external auditors. Quote, who have the access to the books of accounts and other information related to the business. That kind of analysis is known as internal analysis. Okay. Next, when it comes to modus operandi, methods we are using for analysis. Simple things we are using for analysis. Hope you guys clear. Things we are using for things we are using for things means financial statements. Things we are using for analysis is known as material used. Methods we are using for analysis is known as modus operandi. So don't confuse on the two words. So when it comes to methods, we have three methods: horizontal analysis, vertical analysis, and the third one is called we missed it here. The third one is called trend analysis. We have a three analysis based on materials operandi. It means methods we are using for analysis. Hope you guys clear. Now, so horizontal analysis means so there is no problems in our material guides regarding to horizontal analysis. That horizontal analysis is also be known as Wait a minute. Yeah. So let us check here. It is a CMA intermaterial, guys. In this CMA intermaterial also they provided. So modus operandi of analysis called horizontal analysis, vertical analysis. Horizontal analysis and vertical analysis. Let us take the calculation part regarding to that. So these are the tools or methods we are using for modus operandi. Comparative statement analysis, common size statement analysis, trend analysis, ratio analysis, cash flow analysis, funds flow analysis. Guys, clear? So for a modus operandi point of view, what are the methods we have means? Comparative statement analysis, common size statement analysis, trend ratios or trend analysis, and ratio analysis, cash flow analysis, funds flow analysis. Okay. Now, so this is called common size statement. This is called what, guys? Common size statement. Now you have to understand in horizontal analysis, we are using a calculation part name called comparative statement analysis. Comparative statement analysis. Next, in a vertical analysis, we are using a calculation part name called common size statement analysis. Right here. So I am not explaining about the entire discussion of comparative statement analysis and common size statement analysis. I will give how to calculate the comparative and common size. Let us check here. The following income statement prepare a common size statement. Also interrupt the results. If asked this kind of question in exam, calculation part is very easy, guys. Calculation part is very easy, but the only issue is interrupt the results. As a student, you have to write each and every point what happening in the organization. That's clear. When it comes to calculation, the entire question. I think this is the question, right? This is the question. Yes, this is the question. You have to dump entire question. In common size statement, you have to divide it with the net sales for everything. Divided by net sales, divided by net sales, divided by net sales, divided by net sales, divided by net sales. That's the only calculation part. Everything divided by net sales. There is a common base. You will get a percentages like this. You will get a percentages like this. In these percentages, so in the percentages, you have to compare with the another next year information properly. So if you compare, for example, I calculated the cost of goods sold for previous year 54.3%. Now 2022 it is a 47.8%. 47.8%. Now you can observe cost of goods sold for 2021 is 54.3%. Now current year 47.8%. It means what happened? Reduces. It means what happened, guys? Reduces. If the reduces means as a student you have to write the reasons. You have to write the reasons for why that percentage is decreases. Simple thing. Why cost of goods sold reduces? Only few reasons. Only three reasons. Either material cost is reduced, or labor cost is reduced, or direct expenses are reduced. Because of reduce of these three, automatically our cost of goods sold also reduces. Automatically our cost of goods sold also reduces. Guys, clear? So for everything you have to write that point, what happening, why they reduce, why they are increase. So when it come to the calculation part, everything divided with net sales. If it is an income statement, if it is in a balance sheet, if it's in a balance sheet, you have to divide it with, if liability side, total liability, asset side, total assets for every element. Same. You will get a percentages answer. Yeah. So again, you also compare what happening. Increases, why increases? Decreases, why decreases? This is called common size statement analysis. Guys, anyone have a doubt regarding this common size statement? If you give an answer, I will go with the next concept called comparative statement analysis. Comparative statement analysis. Vishwa, please respond, guys. Okay. So when it comes to comparative statement analysis, called vertical analysis. In comparative statement analysis, then they will give like an income statement and balance sheet. So yes, sir. Yes, Vishwa. You have to write every inference for each and every value. For example, in liability or like balance sheet elements, equity share capital, reserves and surplus, totally known as equity, right? So in that case, you no need to write equity point of view, reserves point of view. You can directly write equity point of view. That kind of total you can write. In our material, they provided overview inferences. So if you write overview inferences, that is not that much of clear. But when you're going to exam point of view, you have to write each and every point individually. After completion of individual explanation, you go with the overview. It gives a good sign for good marks. Next, when it comes to comparative statement, comparative. So prepare a comparative income statement. Comparative income statement point of view. When it comes to comparative income statement income point of view, we are not divided with any base value. Here we are comparing with the current year information and the past information. So chapter 1 is a theory based chapter only, but there is a chance for get a problem, Harish. So SPMBB is not predictable as per as like a old syllabus. In old syllabus, yes, I will agree. Chapter 1 is a theory based chapter, but when it comes to new syllabus, they are playing with every chapter. In only chapter 2 in one attempt, they are asking 40 marks questions. Problems, theoretical question, case study. So there is a no fixed pattern, fixed trend for individual subject, individual chapter. So for example, they are not asked theory question also from chapter 1. Not asked, but one attempt. There is no plan. But randomly we can say chapter 1 is a theory based chapter. Okay. When it comes to comparative statement analysis, once again, in one of the MTP model test paper of released by CMA, they asked this question. Please write down the common sense statement. That's the purpose I'm explaining here. Next, when it comes to illustration number 4, so it's a comparative statement analysis. Here we're not calculating divided with the base value of everything. Here we are using another two columns extra. One is amount increase or decrease. Next, percentage of amount increase or decrease. So you have to put this entire box in your answer sheet and you have to add two other columns called amount increase or decrease. Next, percentage of amount increase or decrease. Okay. Now, when it comes to the solution point of view, they put entire question up to here. You can observe they added 2 points: amount of increase or decrease, percentage increase or decrease. How I calculate amount increase or decrease means new value minus old value. That is means 2022 value minus 2021 value. So percentage increase or decrease equals to new minus old divided by old. 2022 value minus 21 answer divided by 21 answer into 100, you will get a percentage. So based on this also you have to write the inference for each and every point. This is called comparative statement analysis. After comparative statement analysis, So trend analysis is not that much of important. Then forget about the trend analysis. Just focus on these two. Why? Again, I'm saying that why I'm explaining these two problematic portions means in one of the MPP they asked this question. Don't cross check the MPPs. Next. So this all you know that perfect 8. So how to calculate FCFF, FCFE, CFAT. When it comes to ratio analysis, there is a chance for getting a MCQ based on these ratios. So there is a performance ratios, um, return on equity formula, return on capital employed, net profit margin, gross profit margin. So think keep in mind for a ratio analysis, don't by heart the all ratios, understand how to create the ratio. So in a profit analysis, always numerator profit, denominator given. Yeah. So when it comes to return on equity, so return means profit divided by given equity divided by equity. So here profit means it is discussion about equity now. That's why equity profit is there. That is called EAESH. EAESH divided by equity. Sir, you said EAESH now, but they are taking a net profit after tax. Net profit after tax. So many times I said net profit after tax is nothing but PAT, profit after tax. If there is a no preference dividend, PAT is nothing but EAESH. In reality, there is a no preference share capital. That's why they are assuming EAESH is nothing but PAT. Okay, next. This DuPont analysis I will explain in next chapter 2. It's a very important calculation part. Every item they're asking this calculation part called DuPont analysis. Next. Liquidity ratios. When it comes to liquidity ratio, we are focusing only two ratios. One is current ratio, another one is a quick asset ratio. The word current ratio means current asset divided by current liability. Quick ratio is nothing but current asset minus inventory divided by current liability. So quick ratio has an alternative name acid test ratio. Acid test ratio. So liquid asset divided by liquid liability. So liquid asset is nothing but high liquidity assets is known as liquid assets. That's why current asset minus stock. Why? Because stock is not a high liquid asset. Stock is not a high liquid asset. That's why they're reducing from the total current asset. Next, liquid liability equals to current liability minus bank OD. So bank OD is not a high liquid liability. It is just a current liability. That's why out of total current liability, they are using bank OD. So this is the way to calculate ratio or acid test ratio or liquidity ratio. There is another alternative name, liquidity ratio. Okay. So when it comes to activity ratios, also very important. Turnover is simply known as turnover ratios. Here also clue. Always turnover is a numerator, given is a denominator. But when it comes to stock like finished good, trade or work in progress, raw material, instead of sales turnover, you have to consider cost sale turnover. So there is a huge difference between cost sale turnover and sale turnover. So next, this is also very important called coverage ratios. Coverage ratios. Interest coverage ratio equals to EBIT divided by interest. Preference dividend coverage ratio equals to EBT divided by preference dividend. Equity dividend coverage ratio equals to EAESH or PAT divided by equity dividend. How many times company able to pay our interest or our preference dividend or equity dividend purpose, we are using this concept called coverage ratios. So next, when it comes to another important concept, procure to pay and vendor relationship management. So procure to pay in a simple manner. The word procure to pay means credit purchase. The word procure to pay means what, guys? Credit purchase. So when it comes to the credit purchase, initially we will purchase, they will send the goods. After we are what are the times? What are the time in the agreement? At that time we are paying the cash. That is called procure to pay for every company. And also there are vendor relationship management. So if you put a good relation with the good relationship with the vendor, it is helpful for your organizational growth. So this is the basic and the soul of the concept. So what is the procure to pay? Simple credit purchase. What is the vendor relationship management? If you put a good relation with the vendor, it will help the growth of your company. You can reduce the competition. So why? Because if your vendor is a good vendor, he will give a stock at any time at least cost. You can produce and you can produce and you can sold to any person easily. That's why you can reduce the competition as well as cost effective. Guys, here this kind of advantages we have if you put a good relation with the vendor. Let's check points. The procure to pay process, also referred to as purchase to pay. What's it? Purchase to pay process or a procure to pay cycle. It's an order. We have an alternative name for a purchase to procure to pay. The first name is purchase to pay. The second name is procure to pay cycle. Okay, is how organization purchases the raw material and services needed to do business. For doing a business, we are purchasing raw material or services. For that purchase, if you are paid, that is called P2P. Next, it provides a linkage between MCT. Put a start to this point. It is an MCT. It is a linkage between procurement function, accounts payable department. So procure function and accounts payable department. So it's simple thing. As a store manager, at the end of the day, I will analyze entire documents of stock related documents. I find out that stock is completed. There is only few stock is there. After 2 days, the stock will be empty. I find out that one with help of the records. After find out that one, I'm talking with the higher officials. I'm talking with the higher officials. There is a stock levels are less. We have to put an order for purchase the raw material. This is the thing. Are you clear? Sir, here what's the linkage between the two persons means simple. The store manager will prepare a document how much raw material they need. First step one. After preparing the statement, they will select the goods vendor. They have a lot of options. They will select the good vendor. They will send the purchase order. I want this much of quantity. After send the purchase order, vendor accept. They will ask some documentation. After providing the all documentation, they will send goods in carrier. At the time of carrying the goods in carrier, they will come with the one document. With the help of that invoice, we will check how many goods I ordered in a purchase order. I cross check with that invoice and the stock in that carrier. After completion of that, I will put a signature and stamp. I will send that as a store manager. I will send that document to trade payable department. They will settle the money within the due date. This is a process happening in procure to pay. Guys, here in every organization happens only this. Let us check. That's why there is a linkage between procurement function and accounts payable department. Next, as well defined P2P process help build a better bottom line as it help develop a better vendor relationship and maximizing the buying power. If you have a well-defined P2P process in your organization, so within the time you are purchasing, within the time you are paying to the vendor, it is called a good process of P2P. If it is a give a better bottom line. It's nothing but operational department is there in a hierarchy, operational managers. Due to operations only, it will give a due to that P2P in operations, it will be strong. If it is an operation strong, automatically operation will be grow. Next, in a P2P process comprises of three primary perspectives which are organized in a loop. It will be continued. Loop means it will be do again and again, 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 again in a circle format. That is called loop. That is called loop. Now, the example I told, what is the example I told? They will translate into three words. First, purchase order, receiving process, invoicing process. Okay. Now you can observe the diagram. You will get a more clarity. Issue of purchase requisition after vendor selection, issue of purchase order to the vendor, logging of various documents related to P2P process, receipt of verification and reconciliation of the invoice, accounts payable department. That is only I told. This is only I told. Next. So explain the vendor relationship management. So different persons provided a different definition regarding the vendor relationship management. You can take anything. They will give only few sole of thing. If you maintain a good relationship with the vendor, if you maintain a good relationship with the vendor, your competition will be reduced, your time will be reduced, your cost will be reduced. They are focusing only these 3 points. What? Efficiency, competition will be reduced, cost will be reduced, time will be reduced. Okay, let us check with the Gartner's defines vendor management as a discipline that enables organization to control cost, service excellence, mitigate the risk to gain increased value of their vendors. Stephen Sharma is another specialist saying that in a new competitive environment, business relationship with the suppliers is one of the most critical aspects for successful functioning of a firm. They forwarded 4 specific issues of their argument. So they're adding 4 points for why he told it's a good relation with the vendor is the best. First one, they increase the cost efficiency, increase the effectiveness, yet changing the technologies, increase the competitiveness. Hope you guys clear? These are the advantages we have if we are maintaining a good relationship. So last time they are focused on customer relationship management, guys. So this time you have to put in more efforts for this vendor relationship management. Another A plus concept, supply chain management. So many times we discussed about the supply chain management. So many times. In mergers and acquisition also, we have discussed with the supply chain management. In a simple thing, the word supply chain management means directly or indirectly fulfill the customer needs. The word supply chain management means it is the process implemented in our organization satisfying the customer needs. In a simple sentence, the supply chain management means it is the management technique we are inserted or implemented in every organization to fulfill customer needs. To fulfill customer needs. Okay. So manufacturer can't sell directly to the customer, guys. That is the point they're explaining. So manufacturer can't sell goods to directly to the customer. In between the manufacturer and the customer, there involved a lot of human beings. And lot of companies. The linkage between all is known as supply chain management. Sir, who will involve, sir? Simple. First thing, are you agree for the manufacturer can't sell directly to the customer? Yes. So the okay, sir. Who, manufacturer is not selling, then who is selling? A retailer will selling. Retailer will selling. So retailer is not a manufacturer. Nah? Yes. Retailer also not a manufacturing. He will purchasing goods from dealer. He will purchasing goods from dealer. Is also be known as distributor. So a distributor also not purchasing goods now and not producing a goods now. Yes. Distributor also not producing goods. He purchases goods from wholesaler. Wholesaler. So wholesaler as a person is not producing goods. Yes, he also not producing goods. He purchasing from OEM. So what I use word used as a manufacturer, there is a technical name is there. The technical name is called OEM, original equipment manufacturer. Original equipment manufacturer. Wholesaler will purchase goods from OEM. Wholesaler will sold goods to Wholesaler will sold goods to distributor. Distributor purchased goods from wholesaler. Distributor sold the goods to retailer. Retailer purchased goods from distributor. He will sold to customer. This is a way to fulfill customer needs. That is a concept name called supply chain management. So concept name called is what, guys? Supply chain management. Okay. So in a OEM also, he need to purchase raw material from another person. Why? Because OEM is has a manufacturing unit, but you don't have a raw material. If you have a raw material, then only he can sold the goods. Guys, clear? Yeah. So if you understand this entire discussion, you can easily crack each and every point. That's it. The supply chain as a consists of all stages involved directly or indirectly in fulfilling the customer request. So customer, I used a word called need, that is nothing but request. Okay. The supply chain not only includes manufacturer. In supply chain, there is not only manufacturer, but also uh, not only manufacturer and suppliers, but also transporters, warehouses, retailers, customers themselves. The linkage of chain of all the people is known as supply chain. In supply chain, links are participating companies. They can either in the upstream or downstream. I will give a clarity upstream. So we start from where, sir? Generally, and exam point of view and knowledge point of view, it starts from OEM, guys. It starts from where? OEM. But in a theoretical point of view, it starts from supplier, the person who providing raw material to OEM. Clear? So that's why that sometimes that supplier also don't have a raw material. He will purchase from another person. That another person is known as supplier. It starts from it starts from it starts from material. It starts from where, the raw material. So supplier to supplier, supplier to OEM, OEM to distributor, distributor to retailer, retailer to customer. That process is known as upstream. Process is known as what, guys? Upstream. Next, for example, if the process is starts from customer to retailer, retailer to distributor, distributor to OEM, OEM to supplier, supplier to supplier, suppliers to supplier. This is called downstream. This is called downstream. Now let's check here. So this um, supply chain management have alternative names that are very important. Value chain, demand chain, value chain and demand chain. When it comes to value chain, demand chain, in supply chain management, four aspects are very important. That is called four intrinsic flows. Four intrinsic flows. The four intrinsic flows are, first one is material flow. Without supplier, and supplier, OEM can't produce a good. That's why material flow is very important. It is the beginning of supply chain management. Are you agree or not? Next, information flow is the second important thing. So what is meant by information flow means retailer need to find out the demand. So if you know the demand for that product, he had to put a order to distributor. If put a order to distributor, distributor put a order to wholesaler. Wholesaler put a order to manufacturer. Manufacturer will produce a manufacturing. For the purpose, he will send the order copy raw material requisition order for suppliers. Are you clear? If there is no proper information, producer can't produce commodities. If producer can't produce a sufficient commodity, distribution chain will be disturbed. The chain will be disturbed. Next, financial flow. So financial flow means money transactions. So without money transaction, every person need to pay advance. So our collection of the advance, manufacturer will start purchase the raw material. He will start the manufacturing. After that, commercial flows. Commercial flows. In this commercial flows, like it's an example of good relation. So the material flow that run through the supply chain change its ownership from one company to another, from supplier to buyer. The commercial flow also very important. So these are the four intrinsic flows we have. What is the four intrinsic flows? Material flow, information flow, financial flow, commercial flow. Guys, clear? Next. Concept number 12, objectives of supply chain management is not that much of easy, important, but we can easily write. For in every concept, you can use there are 2 points. Cost reduces, time reduces, efficiency increases. I hope you guys clear. Apart from these three, you have to learn another, improving efficiency and quality, reducing cost, enhancing customer satisfaction, improving distribution, maintaining better coordination. So why we are maintaining better coordination, guys? We have a information flow. Components of supply chain management also important concept. In components, production, inventory, location, transportation, information are the important points. Vishwa, sir, can you further explain the commercial flow? It's like a simultaneous man. So the word financial flow means money, cash transaction between a distributor, wholesaler, retailer, customer. The word commercial flow means the word commercial flow means, take a simple example. If retailer purchase retailer purchase bulk order from wholesaler, distributor. If he purchases a bulk order, if distributor give a discount, he will purchase some more goods. Hope you guys clear. The discount is there, na? That kind of transactions is called commercial flows. Commercial flows. Next, when it comes to production, so production is very important in supply chain management. That's why I told knowledge and practical point of view, it starts from OEM, but theoretical point of view, it starts from supplier. Without production, supply chain management can't start. It is a primary requirement. So for production, it need a planning. Yes, automatically. That's why they will taking orders first. Based on orders only, manufacturer will do a manufacturing. That is nothing but production. Next, inventory. So maintaining a optimum stock level is a very important for manufacturer. So very important. Maintaining an optimum inventory is a manufacturer. If there is a no inventory for production, automatically manufacturer can't produce a commodity. Distributing wholesaler chain stock, distributor chain stock, retailer chain stock, customer not satisfied. What is supply chain management? Satisfying the customer, fulfilling the needs of the customer, right? So next. After location, transportation. The mode of transportation is a very important thing. So the mode of transportation, for example, if you use a airways, it is a take a less time for commodities transportation. If you take a vessel, it will take more time. It will take a more time. If it is a road transportation, it will take a less time. For example, foreign countries, etc., we are using airways or waterways. But when it comes to within the India or within the country, we are prefer a good transportation system. If there is a no good transportation system, then also supply chain will be break. Next, when it comes to information, I already told regarding to information. The sharing of information is a very important, not for us, not between us. The information sharing between supply chain management people. Next, concept number 13. It only a single question works. Give me a list of the supply chain management and benefit. List the benefits of supply chain management. So it helped inventory reduction, it helped logistic cost reduction, it helped a better cash management, it helped improving productivity, it helped time delivery, it lead to revenue and profit enhancement, it lead to personal reduction. Personal reduction means because of a lot of people involved in the distribution channel, a single company can't use more people. So that's why in a single company point of view, employee cost will reduce. Confirm high customer satisfaction. Why? Because within the time we are providing good to customer. It facilitates better order management. It aids to reducing procurement cost. Procurement cost. Why? Because we are maintaining optimum inventory stock levels. So these are the benefits we have if we implement supply chain management system in our not system. It is a performance management tool in our organization. Next. Unit 1.6, reverse mapping of a business strategies from marketplace using data analytics. So one attempt they asked this concept. I think it's the first attempt they asked this concept. This reverse mapping business strategies, these all are added new syllabus only. This kind of concepts not there in our whole syllabus. That's why there are they're asked in first attempt. So first you have to focusing on the strategy map. The word strategy map itself saying that visible representation of objectives and goals. How we achieve that goals and objectives. We have one plan in our mind now. If we put that plan in visible format, that is called strategy map. That is called what's a strategy map. Hope you guys clear. Yes. A strategy map is a visual representation that communicates the strategy goals and objectives of an organization clear and comprehensive manner. Clear and comprehensive manner. So for strategy map, you have to focusing on key components. Key components. One is perspectives, objectives, cause and effect relation, key performance indicators, initiatives. I will give a clarity for key performance indicators in third chapter. Third chapter. So if you strategy map usually includes a few key components. In every strategy map, they're focusing on perspectives. In perspective point of view, there is a concept known called balance scorecard. In that balance scorecard, we are focusing on four prospects: financial prospect, customer prospects, internal process, and learning and growth. So you have to consider that first for create now visual presentation of strategy. Next, objectives. So why you are starting this business? That is called objective. Why? Next, cause and effect reasons. Next, key performance indicator. How I assess my results? That with help of key performance indicators. Next, initiatives. So initiatives means cross check. Next, this reverse mapping. So generally, what happening in the businesses? Producer will produce, they will sold to distribute, they will sold to wholesaler, wholesaler will sold to distributor, distributor sold to retailer, retailer sold to customer, right? But in when it comes to reverse mapping, customer will produce, customer will customer sold that the chain will be reverse. The chain will be reverse. The chain will be reverse is known as reverse mapping. Reverse mapping. So just an example to understand. For example, in olden days, shampoos are like a bottles only. In a shampoos point of view, only bottles are sold by all companies. One of the person he introduced packets, sachets. So the sachets are purchased by bottle are purchased by a customer. He had an idea. He split that bottle shampoo into sachets. It starts from the down to up. So down to up is known as reverse mapping. I hope you guys clear reverse mapping. It's actually known as reverse engineering. Reverse engineering or reverse mapping. So next, when it come to unit number 1.7, order to cash or customer relationship management. So P2P means credit purchase, O2C means credit sale. Credit sale. Vendor means creditor, customer means debtor. Hope it is clear. So what you learned in your notes regarding to creditor and debtor, now you are learning in theoretical point of view. So you can observe order to cash what happened. First customer, first person will order. That is called customer order. Customer order, customer credit, order fulfillment, invoicing, payment and collection. Payment and collection. So this customer credit is nothing but they are selling credit note to the company. I will pay later. That is called customer credit. So after customer credit, company will fulfill the order. They have sold the goods to customer with invoicing. So after receiving the invoice, so we will discuss with we are agree we are negotiating with the date now. At that date, they will pay the cash. That is called payment and collection. Yeah, see, this question is asked in last pattern. For this customer relationship management, you can take a not choice. You can just understand the overview. That is much more enough. So this also be important. Misrepresentation relating to CMR. The word misrepresentation means generally people thinking like this. That is the wrong version. The word means that is a misrepresentation. So people think that customer relationship merely database marketing. So it's not a database marketing. So it is a database marketing, not 100% database marketing. So from few companies are taking data from manually without manually, and some are estimating. So they're using a word called database marketing. 100% data marketing is a misrepresentation. Next, it is a marketing process. No, it is not a marketing process. So generally, all people saying that it's a marketing process. but it's a misrepresentation. Next, it's based on IT. It's not 100% based on IT. It involves people and process also. So this kind of points is there. You can read out, and objectives also important. Just for MCQ purpose only, not for exam point of view question. And the types of strategies, strategic CR. It is called long-term planning, relationship management, operation. Next, the operational CRM. The operation means only the relation between day-to-day activities. Analytical CRM is between operational and day-to-day activity. So long run and very short run between type of decision is known as analytical CRM. Yeah. So when it come to unit number 1.8, customer profitability analysis. Customer profitability analysis. So every company need to classify their customers. Why? Because every customer not give a profitability to their business, their companies. Every customer not give a profitability to every company. That's why every company need to classify their customers. How they classify means which customer giving a huge profits, which customer give a less profits, which customer give a no profits. This kind of classification is very important. Based on that only we can easily predict profitability analysis. Profitability analysis. Let us check here. Stages of successful implementation of CPA, customer profitability analysis. Step 1, you have to segmentation. This means differentiate your customer list. After segmentation, review attribute to each segment. So how much sales they are doing, how much sales because of that segmentation. I classified segmentation into 5 types. For every type of customer, how much they are doing sales to my company. Next, calculation of profit. Sales okay, how much profit I am receiving. Next, analysis of profitability of customers. Development of strategies for low profit giving customers. What are the strategies we have to plan for getting a more profits from the customer. Review of the strategy. The strategy is working or not, we have to cross check. Next, analysis of customer profitability database. Based on analysis, they are classified into customers into 4 types: loser, problem, potential, winner. So when it comes to loser point of view, profit is negative, sales also less. Profit is negative, sales also less. That kind of customer is known as loser. Problem, profit is negative, sale is more. That kind of customer is known as problem. Potential, profit is positive and sale the profit is positive, sale is less. This kind of customer is known as potential. When it comes to winner, profit is positive and will sale also high. That kind of customer is known as winner. Based on this logic only they classify loser, problem, potential, winner. Now, in 1.9 improvement of corporate rating is not that much of important. So you can take understanding of this. Everyone knows, every student knows the CIBIL score because you are all are using credit cards, etc., right? There is a CIBIL score for individual purpose. The for knowing the credit worth of the person. For every bank, checking the how much capable he was, how much capable he was for repayment. That checking they're using CIBIL score called credit rating. Called credit rating. It is also been known as credit score for individual. For company point of view, they are using same concept name called corporate credit rating. Only thing for individual credit worthiness, companies are checking a credit score. For companies point of view, they are checking a credit rating. So there is a lot of institutes is there for providing credit rating. Just understand the credit rating institutes. That is the only important thing in this question. So we have some credit rating agencies. They will give corporate rating as well as the credit rating. When it comes to important concept, for example, performance management definition, components and elements. After that, financial analysis point of view. Next, supply chain management. All concepts, not a specific question, all questions. Next, difference between performance management and performance appraisal. Next, P2P and vendor relationship management. For this account, you can skip customer relationship management and C2C. Next, customer profitability. So these are the important concepts for exam point of view. Okay. Next, without late, we start with our case study. Yeah. See this case study. The following information on 4 segments of customers is extracted from the customer database of Lotus LLP. Particulars A, B, C, D. Units are sold, selling price, number of sales usage, number of purchase order, number of deliveries, kilometers per journey, number of rush deliveries. So these are the units or time information. Now we get cost information. For cost information, sale visit 2100 per visit, order placing 600 per order, handling 0.3 per item, normal delivery cost 20 per kilometer, rush delivery cost 2000 per delivery. So based on this, you have to figure out the profits and you have to find out the percentages. Based on the percentages, you have to decide which segment of customers having a more profits. Now you have to start with sales. How we get sales? A into B. 60,000 into 2, 80,000 into 3, 1 lakh into 1, 70,000 into 2. From sales, you have to reduce cost. From sales, you have to reduce what's the cost. So what is the first cost? Number of sale visits. 3 visits into 2100, 3 into 2100, 5 into 2100, 10 into 2100. Why? Because one visit equal to 2100. They visited 3 times for segment A, 3 times segment B, 5 times segment C, 10 times segment C. So you will get C 6300, 6300, 10,500, 21,000. Next cost. This completed, C completed. Number of purchase orders. 20 orders into per order 600, 60 into 600, 50 into 600, 40 into 600. Purchase order, sale visit completed, order processing also completed. Next, product handling. When it comes to product handling, number of units per item 0.3, number of items 60,000, 80,000, 1 lakh 70,000. Product handling completed. Next, you can observe here is the mistake we are doing. Normal delivery cost, number of deliveries, kilometer per journey into normal delivery. Why? Because they provided for per kilometer. They provided for per kilometer. So EFK. Rush delivery. Per delivery they asked. So 3 deliveries, 1 delivery, 2 delivery. You can directly multiply with 2000. So after reducing all this, you will get operating profit 78,900, 1,56,500, 22,500, 55,000. Now, if you divide it with the sales, you will get a percentages 66%, 63%, 23%, 39%. Now, A people, B people are high profitability customers. High profitability customers. C, D are the low profitability customers. So this also case study they provide in our board material, guys. You want to cross check this. So this is the important. This is the important regarding to chapter. So thank you for your patience, guys. Hope you get this class helpful for you for the examination. So I am signing off. Thank you. If you have any doubts, you can ask me. Thank you, Priya. Thank you. Thank you. Thank you, Harish. Okay, guys. So we will meet tomorrow with chapter 2. Thank you.